All right, thanks for joining me. So day trading. Let's talk about day trading and talk about how you can make a profit in this year in 2024. And before I start, I've got this video. This is Berlin on Sunday night. Look at this, they're going crazy. Whole Berlin comes alive. Right, so make or break. What's going to make or break your day trading account? What's going to make or break your ability to make a profit in this market? So what I'm doing is I'm just showing you the bigger picture, the way in which I lay my charts out just on the bigger picture. Because if you, what I'm going to talk to you about is how to measure the up and coming days and weeks and so on. Because if you have a system that allows you to measure the day, then you can day trade. If you go into this market thinking you can just get in and out on using RSI or something, in my book, it's doable. I've known people who've successfully traded on 1 2 minute charts using RSI, buying the lows, selling the highs, or selling the highs, buying the lows. But to my way of thinking, unless you've got much more specific system, you will not make a profit, a consistent profit in this marketplace. So the reason why I'm showing you this oil trade is so I can talk to you about what I did with oil today. By the way, if you want to ask any questions, then type them into the room. If you want to, um, if you want me to turn your mic on, then just drop me a note and I'll turn your mic on. You can ask. And if you've got an opinion on oil or day trading, then yeah, share it with us. Again, tap it into the room, and I'll turn your mic on. Right. So what I've done here is I have put the fib ratios on last year's range. And this is what I do with every single chart. So the highs and lows of last year's oil, 63.80 on the lows and 94.20 on the highs. Now, if you are familiar with Fibonacci, then bear with me a moment, just while I talk you through it. I'll talk you through how I use Fibonacci anyway. Basically, these ratios, so that's the high and the low. You've got 50%, which is not technically a Fibonacci ratio, but hey, bear with me. What I'm looking for is this oil did the biggest move in oil came off of this level here, this 70 level here, before it went to 94.20. So what I'm looking for, the reason why I bought the lows in oil today, and I'm still in this trade, I've got a very small position anyway. It's because I think if this is what I call the ambush zone. So that's the outer ambush zone. This is the inner ambush zone, 50%. So if you've had a big move up in the or in any market and you are holding this support zone, what I call the ambush zone, then this is why I like to buy these lows here, because if we subsequently close above this level here, then I think we can get, a 1 2. I think this could potentially wave 3 that could easily go into a 75.80. All right, so by looking at the bigger picture and having a system for marking off these levels of support using a bigger time frame is my way of um, trading to a higher success level. And I'll talk to you about a couple of other aspects of oil as well, but the main title of this was, one way to make or break your account. And this is one way you can make or break your account. You can measure last year's range and pick off these support levels, and you can day trade it while this is going to wiggle around. If this works, this is it may take all week to get up to 75. Who knows? If it gets up there a lot quicker, great. But I'm just picking off these levels here because if we hold 75 this week, close above it, I'm going to be buying 75 next week to try and go to 80. And I'll be using a lot of leverage. I'll be using the futures market in between these levels. But I also would be holding a bigger position, a core position to while this potentially swings up to these levels. That's just my preferred way of trading. You don't have to do that. Most, there's nothing wrong with, in fact, it's a healthy thing to do to, just trade these markets as a day trader, get in and out, make your profit, close your account, and then protect your profits. All right, but if you want to um, add to a winning position and use day trading in the style that I like, in other words, building a position and maximizing my leverage by having a core position and day trading around a core position, yeah, that's what I like to do. Now, um, so that's the main make or break aspect of oil for me. Because if you look at what happened last year in oil, let's go back to now. So last year, I would have had my charts like this. Get a bit more data on there. So in the previous year, let's get a bit more data on there because it's not doing it. Right, here we go. So last year's oil, this is the 22 range, 23 range. Sorry, there's the high of 23. Sorry, the high of 22. There's the low of 22. So this is why I was buying oil. If you look far left from these lows here in March at 65, you'll see we were around the 65 mark on December 21. So once we got down there and then started closing above the 22 lows on 70, then I was buying. And then look, you'll see how in August we were up there at 83.78, which was a key ratio. And the highs of 23 was the inner ambush zone. So there's the 50%. Let me get the pen again. So there's the 50%. There's the inner ratios and the outer ratios. So once we held these lows down here and then broke above here, we took a while, but we went up to these levels. So you could day trade this support. You could buy that. I was buying this support and take it off at this resistance because I'm not looking for a major break on day trading. I'm looking for intraday profits. So now we've got these levels working out here. So let's go back to price levels we've got this year. Let me just kill that. Take this 22 level off. Put the 23 level back. So the high 23 was 94.30 roughly. 63.70 was the low. And here we are holding the ambush zone. So we've got all this support down here from June last year, going right back to March and over the summer. So if we sit on this level here, I'm going to continue to buy dips intraday until that gets higher. Now, if you go to the 15-minute chart, what I've got here is This grey box is the invent range. So normally it's the inventory data comes out on Wednesday. Last week it was Thursday because it's a shorter week. So you can see how today we ran into that 73.70 area and popped right back out again. And you can see on my chart, on my screenshot. So I got 56 points here. I bought the low here in the oil. Small position, 56 pips, and still holding that. All right, so you can see we actually gapped up here in the oil on the Sunday open yesterday. So we closed last week around the 71.30 area, which is where we just pinged off of just now. Gapped up, went into the invent range, fell out the invent range, fell into that daily support, and now this support is getting bought. And I'm looking for this to go back to 73.50 again. And if we can break out the other side of that, then I'll look for 75. Okay, I hope that makes sense. Any questions? So this is all part of the point. My point is I've got very, very specific points, price level points that I look for in something like oil. Every market's got its own characteristic, but the beauty of oil is you've got the invent range on midweek and you can trade around that and exploit it. In the meantime, the other major support and resistance is always going to be what you see in this daily chart. So to make or break your account, in my book, you need to be aware of what the daily chart is doing and look at the ratios of this current market in relation to last year's ratios. Mark off the intra-week support and resistance, which is your invent range, and then if these markets if the low ratios are holding, buy, target the higher ratios. But if you've got an invent range in between that it can't get through, then take a smaller profit, the profit into that invent range. Any questions? So although I'm a day trader, I'm very, very tuned into what the daily chart's doing, and then making sure I am trading the decent level of support and taking off short-term resistance. But like I said, you've got the option of trading around a core position rather than just going all in, all out. But it depends on your trading style and your trade plan. So here we are. So last year we had a higher close the week beginning on the weekly chart, higher close beginning the week, the 11th of December and the 18th of December. Close lower into the doldrums of the Christmas holiday period. And here we are coming back into the higher close from the 11th of December. So with the weekly chart closed higher on the 11th of December, so all we're doing is falling back into that same price range. That's why I'm buying. And seeing if that daily chart can hold up and close higher and push up into resistance. So if you want to join me in the trading room and learn this system, this is only just one small aspect of the system. I have a check sheet that goes across different markets, primarily indices and oil. And if you come on the training program, then you'll learn this system and the other anchor chart that I use around this, which gives me a very high probability trade. I'm looking for a high 60% in a choppy week up to sort of 80, 85% on a good volatile week. Because the more volatility, as a momentum trader, the more volatility, the better. Any questions? All right, let's have a quick look at the Dow. Keep this nice and short. So we're struggling with 23 highs at the moment. So if we close above 23 highs, then I'll be buying dips and trading up to 39.5. If we stay underneath this 23 highs, then I'll be shorting 23 highs and see if we can start to break down and come down to these levels here. But that's the bigger picture. In the meantime, my day trading system allows me to short at the right points, at the main pivot points on this chart, using a system to pinpoint the right level, the right entries. Okay, right, no questions coming in. So I will send out details of the programs I got running as the week unfolds and I get down to business. And so watch out for future events. This oil's hit a resistance area and falling back a bit, but I'm going to stay in that and see if that can push up. All right, I hope that helps. Watch out for the next events and join me in future events. Thanks very much. Bye for now.